You're about to find out why the New Jersey Broadcasters Association is inducting Harry Hurley to its Hall of Fame. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 1450 and WPG1450.com.
Thanks very much, and welcome back. And thank you, Leader. Leader was just in the studio doing great things, as usual. Ladies and gentlemen, the following program that we are about to enjoy is paid for by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck Malamut, how the heck are you, my man?
Good morning, Harry.
This is a big day. I have the brothers Malamut dominating the program.
When I saw your email yesterday showing the lineup,
You have a tough act to follow. I loved it. Bill, I want you to know you're older. I will say slightly more attractive brother. No, I'm just teasing. I said slightly, just teasing. But Chuck wrote that he has a tough act to follow, and I thought Bill was, as usual, thoughtful and excellent in his presentation.
You know, Harry, I don't want to beat a dead horse, so to speak, and I do feel awful for Dr. Sockhamp. You and I were not at the negotiating table. I'm going to take your words, which basically said that he made this deal unilaterally and did not consult his board of trustees. I guess we'll find that out later. But
no. We already found it out because I said it.
Okay, but
I
think
I have a 24-plus year track record. If I say that I know that that's the case, then it's not we'll find it out later. We already found it out. And here's the other proof positive of this, Chuck, and then we'll get to our first question, which is going to be the market update with our official financial advisor, Chuck Malamut. If the board was on board and if they were a part of the decision and if they voted and if they all agreed, Dr. Sockhamp wouldn't be leaving, would he?
No, he wouldn't, Harry. And I think, you think about you spent a lot of time at Stockton at a very young age, and you've seen the development of that university. And it is a vibrant part of our economy, and a lot of positive things have happened over the last 12 years. And it's just really sad that anyone's career ends on a note like that. And,
yes.
And bottom line, look, we deal with money all day long, and it's very, very obvious to see what the Taj Mahal is trying to accomplish here, and it's all about the money. I mean, you can listen and say we're concerned about underage gamblers, and we're concerned about the kids running amok in our facility. And I think Brother Bill said it all too well. And the Taj Mahal has just done a very, very poor job in keeping their property up to snuff. And to say that you need a first-class gaming operation next door. In all due respect to Carl Icahn, it's a joke, and I'm going to leave it at that. So,
here's the thing, though. Leave it to me.
Let me finish. Let me finish a second.
Okay.
And if they sat down and Stockton stroked the check, to the Taj Mahal, this thing would be over.
Of course, it would
okay?
be. But here's my point, though. This isn't business. Nobody said it's pretty. Isn't that his right to take full advantage?
Of course it's his right. But, the bottom line, and I listened to our local politicians rail on Dr. Sockhamp over the weekend. I mean, just talk about poor timing. The Stockton Big Gala of the year is Saturday night. They're raising hundreds of thousands of dollars. Dr. Sockhamp is responsible, for this event, and he's got to put it. He's got to put his game face on, knowing that his days or number of hours are numbered here at this point in time.
Okay, I got to squeeze this in, and then we move on. Let me share with you, now that you bring that up, an exact quote. As that event was literally going on, I'm not saying names this morning, but a high-ranking state official, high-ranking state elected official, let me read to you the exact quote. So while that money was being raised that you're talking about, the person that I'm talking about said, I want Herman gone tomorrow.
Oh, no,
I plan to turn up the heat. I don't give them a week. So interesting to note that, well, look, politics is all about having a fall guy anyhow. Now, I can't defend Herman on this because he's not an innocent dupe fall guy. Sometimes a fall guy, look, somebody leaves the pool filling overnight and they're told you got to stay there and watch it and not let it overflow, and it's very easy to forget. And then they let it overflow.
We never did that.
And they knock out the entire ballroom ceiling. And if the water, as you know, seeps its level, somebody's got to pay, right, Chuck?
Harry, you bring back these awful memories.
Somebody's got to pay. Oh, there was so much water damage, Chuck. We could tell that story, but we won't. Just suffice it to say, somebody did pay for that mistake. All right, so the deal is Stockton is probably not even going to own the Showboat, Chuck. They want to sell it. Stockton does not want to keep it under any circumstances. And, in fact, the only way Stockton's going to keep it is if they can't sell it. And then it'll be a real disaster because they don't want it. But they will be in a position where if you can't sell it, you got to operate it. So they'll be forced to put more into it. But they evidently have two credible buyers. It's part of our breaking story, and we're going to keep everybody posted on that. Chuck, if you would, give us an update on the markets.
Well, Harry, I'm very. I guess we got kind of off track here because it's now 8:10.
But it was good though.
And you haven't discussed your most favorite company.
Well, I did earlier.
Okay.
Wall Street loves them, Chuck.
So, I mean, Apple, basically hit the cover off the ball again. So if you look, they earned $233 a share, $58 billion revenue was reported. The pre-market, the stock is up about $2.50. The expectation was that analysts thought about $216 a share and about $56 billion in revenue. So that was sort of the consensus of all the analysts that covered the stock. Last year, Apple earnings were about $1.66 a share on about $45.6 million. So,
Chuck, what do you say about a company that has a stockpile of cash that tops $194 billion? Thank you very much.
The stock is obviously in everyone's portfolio. If you do not own it individually and you own mutual funds, you're going to own that stock. And it is, total market capitalization is the number one position out there. The concern that I think all of us should have as we watch Apple move forward is the fact that can they redeploy that cash in future, acquisitions, development. I mean, there's been as we're getting, the iWatch is starting to, gain a fair amount of attention. I don't think they were expecting, to sell the number of iWatches compared to what you do with the iPhones. But
I think that's going to turn out. I did a whole monologue on this morning, Chuck, in the 6 o'clock hour. I think the watch thing is going to turn out to not be really successful, but they're going to get a pass on it, aren't they?
Yeah, Harry, they're going to get a pass because I don't think they set great expectations on the iWatch. It's not like running the iPhone 7 or whenever that may come to market. So. The bottom line is that, again, investors have to be very, very pleased with the outcome. And that kind of, rolls into where we are right now. If you take a look at last week, we got into record territory, especially in the NASDAQ. I mean, you think about it, it's been a long time. 15 years ago, in the year 2000, the NASDAQ was at the level that it just recently surpassed. So if you were sitting around and you just bought the triple Qs, so to speak, and which was the NASDAQ, the ETF, you are now, you're now even. Now, hopefully you didn't do that. Hopefully you were more astute with your capital and redeployed it in an effort to buy the right companies. But you think about where we are. The S&P up last week 1.8%. And I'm going to, Harry, I don't want to sound like a broken record, but we've had this discussion I don't know how many times. But the international markets continue to eclipse what's happening here in the U.S. Evidence in the fact that year to date, S&P is up about 3.5%. The Euro Stoxx 50, the 50 largest stocks in Europe, up about 6.6. The FTSE, which is the UK, is up about 6.3. The DAX, the German market's up 7.5. But the real winners here is what's happening in Asia. up 15, 20, and 36%. So, it's great, to stay home.
What are they doing right?
Well, I think what happened, you take a look at what is happening with China, the fact that, they've recognized in China that the fact that their economy growing, can you imagine growing at 7%, Harry, is not acceptable. So they've recognized that, and the fact that, you can now begin to buy, as a Chinese citizen, you can begin to buy, equities on the Hong Kong exchange. I mean, that has virtually helped, that market as well. So I think the case in point is that your listeners need to really be conscious of what they own, why they own it, how much domestic versus international exposure you have. And the one thing that we haven't talked about in a long time is the word geopolitical. I mean, Greece has a tendency, it ebbs and flows. It's in the news today, and it kind of goes to the back seat, and then it's back again. So I think that that will come to some resolution. I was talking with a very good friend of mine recently, and he is from Greece, and he reminded me, he said, look, the problems that you have today, we had 20, 30, 40 years ago, and it's just re-racking the tape. It's never going to, it's going to be very, very difficult to solve the roadmap. Problem. Absolutely. They've been through it. They lived through it. So
good to talk to them about it, because, to repeat mistakes you don't have to repeat, to me is silly. But you did raise a good point. When 7% is not good enough, what a problem that is to have. We would absolutely do backflips to have 7% growth, Chuck. We're now downgrading to 0.
Harry, I think the new norm, you think about what is happening here.
Is there a new norm, or is the new norm just an excuse? I don't think there's a new norm.
I want to say, I'm going to agree with you. I think it's more an excuse than anything else. And I don't want to talk about what's going on outside of my world, because, it could, if I were to, express my opinions, I think a lot of your listeners might be very upset with the way we think sometimes. But if you watched, we went to your event a couple weeks ago, which was just, fantastic. And Gary, the first speaker, Gary Aldridge. I mean, he was just riveting, and he was talking about, everything that was happening in Missouri, and the fact that the way the media grabbed hold and made more of a story than was actually happening. And I'm watching last night, the Baltimore police, lined up next to each other, walking down the street, and the first people that they're coming in encounter with is the media. Mm-hmm. You're seeing the media film the media watching the police come down the street. Now, I'm not
almost directing the riot.
Yeah, so I'm not saying I'm not throwing cold water on what happened, Harry, because what happened is awful. And you think about the state of our country today, and where we are, and it all kind of ties in. Say the lack of economic growth sometimes is because we have a tendency to take our eye off the ball and focus on things that are not helping the economy.
Would chaos, violence, looting, all this horrible stuff that's going on, obviously a mayor who said we gave the criminals space to destroy things we've never heard in American history, actually took place in the last 12 hours to 24 hours. Does this qualify as a geopolitical event, or will our markets be unmoved by what's happening in Baltimore? Well, I say we have found the capacity that these kinds of events will not have any effect.
I think going into today, and again, we don't like to talk about what happens on a day-to-day basis, Harry, but certainly, the futures are indicating. You have the really positive news from Apple. You've had some really good news from the drug companies this morning. I think Merck and Pfizer both came and beat expectations. So in the market, the last time I looked, the futures were off slightly. So we have grown. Unfortunately, we have grown more accustomed to what we're seeing. And I think it's something that, again, I'm not going to express my opinions because I think a lot of people will not be happy with what I have to say. But I will say, Harry, that it's got to stop. Okay, this behavior is just unacceptable.
Yeah.
And the fact of the matter is,
well, it's bad for our country. And by the way, that beautiful speech you were talking about, I want to, because listeners are writing me, we know we're talking about Larry Menti. Gary Aldrich was at our event. He was our first speaker the very first time we did the event. Larry Menti and Dawn Stensland-Menti were the speakers that were talking about the media that we were talking about. So we're with you on that. That just was two different things. Gary was our first speaker, and Larry and Dawn were our most recent speakers. Chuck, let's talk about corporate earnings.
Good point, Harry. You know, you think about as we got into the earnings season, expectations on almost a daily basis were tampered down. To the point where, you know, analysts were scratching their heads. You think about we had a couple things. We had oil, which, you know, was a number one threat to the economy. You had just the awful winter that we lived through, you know, across the nation. The fact of the matter is, when you look at earnings today, going into this morning, actually, about 40% of the S&P 500 companies have reported results so far. Earnings are beating the tampered down expectations by about 5.5%. Revenues, and that's a concern because we always talk about, you know, missing the top line. Revenues are missing by about 1%. So that's something that we need to think about. If you take everything out, what is happening in the energy sector, if you just wiped out that whole industry and didn't include them, earnings would be up close to about 8%. So that's all, you know, very good news here.
Chuck, we're going to just break new ground in the history of the program. We had Bill Malamut in the 7 o'clock hour. We have Chuck Malamut every Tuesday morning in the 8 o'clock hour, our official financial advisor for 25 years now. And for, I think, the first time ever, I am weighing in on a communication from your brother Larry. Larry has the iPhone watch. I love his choice of the face. It doesn't have to be that. You can do whatever you want with that. Larry says that the app, and I've never known Larry to be wrong. Never known Larry to be wrong. Larry says the iPhone, the Apple Watch, will be a winner. And Larry, I wrote you back. I love the look of the watch. I love Mickey Mouse as the hands to your clock, and it has the day, it has the date, it has the temperature, and that looks nice. Larry
is at an advantage compared to brother Bill and brother Chuck, and he's
a techie.
No, he's younger, and what he's failing to recognize that his eyesight will be going over time, and it might be a little more challenging to read that very, very small screen. So I'm just going to say, enjoy it now.
Enjoy it while you can, is what you're saying.
That's correct.
Right. For the clock purposes, that is.
Oh, the clock is
good
wonderful,
for anybody.
But you know,
I do agree.
Some of the other, you know, when you get into
text
it,
messaging, I got to see it sometime. It's funny. I always look at new technology and want it, but I didn't want that. Chuck, take it back on earnings.
No, Harry, I agree with you. I mean, you know, the iPad, the iPhone, you know, it's not going to make it like the iWatch and the iPad are not going to make it like the iPhone. So, you know, when we talk about earnings, the fact is now you have 60% more of the S&P 500 companies coming to market in relatively short order. If you looked at what's happening today, it seems like 2 out of 3 or 3 out of 4 companies that are in fact reporting, you know, have beat, you know, expectations. So the big dilemma right now is that the Fed is meeting this week. And because we have had these reports that are somewhat conflicting, you know, the expectation was, you know, the earnings were not going to be that good this quarter. So that is, you know, not proven to be. You know, earnings have exceeded, you know, the lower expectations. Initially, as we got into the fall or the winter, everyone seemed to believe that the Fed would make their first move in the first quarter.
But your pal right here didn't.
And now the expectation is the June it got pushed to June,
and now it's been pushed even further. And
now the expectation is they're looking that hikes will probably begin in September, and so. And I think you have that kind of push-pull here. You have that, you know, the slowdown in economic growth. I mean, we talked about earnings beating expectations, but I think what your listeners need to understand is the fact that earnings were lowered a number of times during the first quarter. So what is happening now is you have that slowdown in economic growth for the quarter. GDP was nowhere. I mean, Are we
zero?
Okay, so maybe at best, one
and downgrading all of the employment data too has been downgraded for 2 months in a row.
And so that labor market did get hurt. So now their expectation is that as we get into the second half of this year, you're going to just have an exceptional economy, and I'm hoping that those expectations are right. So
Chuck, let me give our new Fed chair a compliment. See if you agree with this. This is just coming from me as a layperson. I appreciate it when people are willing to look at something and alter their course based on legitimate changing circumstances. Because there are people that if they were ready to do something, they do it anyhow. And this was, in my estimation, the absolute right decision to slow this down, because now was not the time. Look, it's unprecedented. Is this the longest stretch of your whole career, Chuck?
Harry, you think about it. It's interesting enough as I was getting prepared.
It's like 7 years
for our discussion today. Actually, the Fed fund rate has remained unchanged since December 2008. So you're talking, 6+ years.
Mm-hmm. This December would be 7 years.
Of this, not I want to call it free money, but, very, very low with no interest rates. And you think about how, your multinational banks and your regionals, how tough it has been for them to print profits because they need that spread. They need rates to move higher. So the expectation is that, core inflation, I guess you X out energy, you X out food.
Yeah.
We don't need
to eat.
It is starting to creep a little bit higher. Financial conditions are starting to look better. The Fed is probably on track, Harry, to raise rates, as we get into the latter part of this year. And I think the big question is when the central bank does begin this process. This reminds, what we don't want to have happen. I remember many, many years ago, it seemed as if every 2 weeks or every month, the Fed was jumping rates 25, 50, 75 basis points. The expectation is here, this time around it's going to be a little bit different. And, they're going to be slow.
Chuck, when you talk about that not to be too hot, not to be too cold, and that is very, very hard, and you can't time the markets, all these things I've learned from you over 25 years, how do they know? I guess.
Well, Harry, you know something?
Because all of a sudden, if they say 25 basis points, they really don't know what that will do, right?
If it was in a perfect world, they'd have the answers.
You almost have to do it and see what happens.
It's like.
But in all fairness, though, it is good to see, though, that when all of a sudden GDP is back to zero growth and your employment statistics are all being reverse negative, downward, it's nice to see that they say, hey, we were going to do this because, remember, it wasn't that long ago, even the president was saying it, he was touting, like, the great economy and he really, like, floating how well things are going, even though there seemed to be a disconnect from those words to how people were feeling about it. But I think it's a very good decision to say, whoa, circumstances have changed, and we're not going to do this right now.
The Fed has been very accommodative. It's very, and that's why the equity markets have performed the way they have performed. And you have that, that ongoing discussion where it kind of goes, well, the rich have gotten richer, the poor have gotten poorer, and I'm not quite certain that how well that plays out. I mean, I know obviously, I think who has really gotten hurt in all this is, a family that was in that middle class.
Yep, I agree with that.
And they're getting squeezed now with higher prices, higher property taxes.
Yeah, that's truly the answer. The middle class has taken it the worst, not the poor, because there's never been more benefits, not the rich because they're doing very, very well, but it is the middle class. So
the expectation, getting back to what the Fed is likely to do, the expectation is we're going to probably be looking at a total increase of 1%. And, that's going to be done gradually. Now, that doesn't mean you get to a meeting and every meeting you move 25 basis points. So that's not even 25 basis points over 4 straight meetings. That might be 25 basis points over 2 years? Well, it could be a year. It could be, it could be 8 months. It's anybody's guess. I think I think you said it absolutely right. What the Fed has to do here is clearly understand what the impact is with a with an increase in interest rates.
I think they've been doing a good job recalculating.
We're the opinion that as short rates move higher, and short rates moving higher actually is a good thing, for those individuals that have money in the bank, so to speak, that are earning nothing. I mean, imagine being in Germany right now and you have a negative return. You are paying the bank to hold your money. So that's going to help, and we're going to see it. Will definitely help the banks, as I mentioned to you earlier. They'll be able to, increase their profit margins because when they lend, they need that spread to help their earnings per se. So I don't think raising rates is going to be that detrimental to the economy. And
because your actual, even in a savings account and things like that, different instruments, your interest rate will improve.
You'll get something now.
Yeah. And
I think the big fear, and only time will tell, is that if you're buying your intermediate term corporates and govies, your 7 to 10, your 12-year maturities, the expectation is that you're going to have very little movement with that part of the yield curve, so to speak, versus what's going to happen on the short-term side.
Brief timeout. We're coming right back. It's 31 minutes past the hour. You are listening to the official financial advisor to Hurley in the Morning, Chuck Malamut. Chuck is the leader of the Malamut Group at Morgan Stanley's Northfield office, and his direct phone number is 609-383-2010 for all of your financial planning needs. Tell Chuck that I sent you Hurley in the Morning to the Malamut Group at Morgan Stanley in their Northfield office. We're going to be back much more with Chuck. When we come back, we're going to talk about domestic versus international equities. We'll continue in 2 minutes. For more than 20 years, the D'Amato Law Firm has served as the official lead counsel to the Hurley in the Morning program. Led by certified civil trial attorney Paul D'Amato, the D'Amato Law Firm focuses their practice in representing those who have been seriously injured in construction, products liability, and motor vehicle collisions. The D'Amato Law Firm expertly handles cases throughout the country, but their primary focus is on representing victims injured right here at home in southern New Jersey. They've earned a reputation for excellence. From direct personal experience, I can readily confirm that the D'Amato Law Firm's overall competence, attention to detail, follow-up systems are outstanding, and they truly shine during your moment of truth before judge and jury. The D'Amato Law Firm is centrally located in Atlantic County at 2900 Fire Road, Suite 200. That's the second floor in Egg Harbor Township, New Jersey. That's the corner of Fire Road and the Black Horse Pike. For all of your personal injury legal needs, turn with confidence to the region's leader in the field of personal injury. They're the D'Amato Law Firm. Call 609-926-3300. That's 609-926-3300. And please tell the D'Amato Law Firm that Hurley in the Morning sent you.
Maryland's governor has declared a state of emergency in Baltimore. A curfew begins tonight. Rioters plunged the city into chaos hours after the funeral for a black man who died in police custody. No announcement from Chris Christie about a presidential run, but when asked the governor last night, he insisted he hasn't made up his mind yet and won't announce until perhaps mid-June. Last week, the Bridgeton City Council approved a measure calling on state lawmakers to issue licenses to illegal aliens. But on Ask the Governor, Christie was asked whether he'd allow it under his watch.
The answer is no. As long as I'm governor, folks who are undocumented are not getting driver's licenses, and I've said that from the beginning.
He says licenses are the single most important form of identification. More troubles for the new owner of the failed Rebel Casino. The state says Glenn Straub is not legally allowed to possess the slot machines and other gambling equipment in his own building. Why? They say he cannot assume Rebel's old gaming license, has to apply for his own. No word when that will happen or how long it'll take. Get breaking news, weather, and traffic alerts on your cell phone. Text news to 89,000. This is the Town Square News Network.
This is Harry Hurley for Capri Pizza and Grill, located directly next to Broadcast Center at 900 Tilton Road in Northfield in the Terramar Plaza. I've called it this for over 40 years. Rocco Giuliano, the owner, has billed it as the world's best pizza. But maybe what you didn't know about Rocco Giuliano and his great restaurant, Capri Pizza and Grill, is that Rocco presents a full-service restaurant. He's hired a very acclaimed chef. They offer fast delivery. You can call 609-646-2831. That's 609-646-2831. They cater for all occasions. They're open Monday through Thursday, 10 a.m. to 10 p.m., Friday through Sunday, 10 a.m. to 12 midnight. You've already tried the rest. Well, Early in the Morning says now it's time to try the original, the best. Capri Pizza and Grill, 900 Tilton Road in Northfield. Tell Rocco that Early in the Morning sent you. Thank you very much. Welcome back. 34 minutes past the hour. Chuck Malamut, our official financial advisor to the Early in the Morning program. Make him yours, 609-383-2010. We're talking all about your financial matters. And, Chuck, we left right before the break about a discussion about domestic versus international equities.
So Harry, Draghi and the ECB, I mean, that money flow, they're basically going through, QE that we had here for all these years. And I kind of view it as, that part of the world is playing catch up to, what we have accomplished here in the, domestically here in the U.S. So, and you're starting to see it unfold, with the returns. I mean, the fact of the matter is that we kind of only chatted about it just for a second before we went to break. But the Chinese, it's just such an amazing story, and we really don't understand what goes on because we're so far away from it. But the rule change went in where investors can allow for multiple accounts. Mainland stock investors opened 3.25 million new accounts recently, a record. So, margin debt, as we refer to it, the ability to borrow against stocks, that has increased as well over there. So, you have to be a little, cautious. Is that in fact a runaway market? Particularly, the Hang Seng, as it's referred to, that particular marketplace. Year to date, they're up over 20%. So you got to be a little cautious of that. But I think globally speaking, monetary policy, continues to remain in that easing mode. And as we are in that easing mode outside of the U.S., it's going to impact country by country. So China, is an example. The policy support is going to accelerate growth there, but it should also moderate somewhat of the slowdown at the same time. In Europe, this ongoing massive quantitative easing program should also increase growth as well. So I think the best way to kind of look at it is, they're playing catch up, and two, it's sort of a rewrite as to what has happened here in the U.S. and the fact that we push through these numbers that are historical in nature. I find that pretty remarkable here domestically, and you're going to now see that happen overseas.
Chuck, when you talk about like international, is it a fair comment to say that, because in life I think this holds true in many cases, what we don't know, we really can't get our arms around. So it's sort of the unknown, right?
Well, Harry, it is the unknown. But if you remember, as we approached the first quarter earnings, one of the concerns was the multinational companies, the companies like a Coke, a Pepsi. We had that strong dollar, and that news, you think about it, that news has kind of fallen by the wayside. All the news about oil has sort of fallen by the wayside, but the concern was that the multinationals would have a struggle. But you think about the money, Harry, that's just sloshing around that needs to find a home.
I know.
Last week, U.S. stocks again were aided by the M&A, the merger and acquisition activity. Teva Pharmaceuticals making an unsolicited $40 billion bid to take over Mylan Labs. I mean, Harry, this M&A is remarkable. So the good enough earnings, last week helped support the market as well. We did have some misses. IBM, which has missed now, I think, the last 6 quarters, has their hands full for sure. Facebook missed as well, but that was partly due to what's happened with the strength of the U.S. dollar. But think about this: Caterpillar, a company has been beaten down for the last 6 to 9 months. It was just analysts were saying it was just an awful company to buy. They beat expectations. Amazon beat expectations. Microsoft beat expectations. So you're starting to see, that positive, mindset return to the equity markets. And it's a matter of, is the glass half full, Harry, or is the glass half empty at this point in time?
Very, very powerful. Chuck, we've got about 5 minutes left in your program for today. Tell your listeners about bond market liquidity.
Harry, you think about it. We've had this, this restriction that has been put on the banks and bank regulations. So that has reduced the credit market liquidity, the availability out there. You remember the stress testing that continues. The Fed rate hike has made policymakers think about additional regulations, for these asset managers. So, what is happening now, money center banks, we seem to think, are going to perhaps do better than the traditional asset managers and insurers. And you think about, Harry, last week, what happened with Travelers, they had a miss. So it's something that, we're not going to make, as you know, we're not going to make recommendations on an individual security buy. We'll never do that. But I think you need to take a look at some of these, stodgier, banks, so to speak, and that might be a good place to potentially redeploy some of your capital. I do want to come back to, we only touched on it just very, very briefly about, and I think before we went to break, about the yield curve and how short rates might move higher, intermediate to long-term rates will probably move higher just ever so slightly. But, historically, here's what's happened. When you look at the quarterly data, for over 25-year period, 1985 to 2010, a 1% move in Fed fund rates, and that's what is being projected right now, on average, that equates to a 22 basis points or 0.22 move in the 10-year Treasury. So, with the 10-year Treasury at roughly at a 193, to go up 22 basis points over the course of that 1% movement on Fed fund rates, so we'll call that, I'm going to say, 6 to 18 months, that's not a big move. So, I think in investors that have money on the sidelines and they're saying, well, interest rates are going to move higher. I mean, Harry, how many times have we heard this story? I mean, it's been a rewrite for the last 5 years. Rates are going higher, rates are going higher. Think about the cost of capital, what you cost yourself waiting for that moment to happen. 3-4% a year is not too terribly bad right now in the environment that we're in, for sure.
Chuck, awesome closing comments for today.
Well, Harry, look, I'm really interested to see, how the rest of earnings season plays out. I'm very, very pleased in the fact that we have not seen and heard a lot geopolitically speaking. And if we can kind of stay off the front page with these sorts of events, I think that's going to be relatively positive, as we get into the summer season. And I agree with you. I think Janet Yellen has done a magnificent job in a relatively short period of time, and I think she will continue to guide us in the right direction and keep the equity markets moving in the right direction. Yeah,
I totally agree with that, and I give her great credit often because I think there were some people that didn't know what to expect coming in. I think she's been very solid, Chuck. And I think she's going to deal with actually a tougher slog than predecessors have dealt with, because she's going to have to be the one to shepherd us out of this uncharacteristic and very long-term zero-rate environment that we've been in, because that can't stay forever.
Yeah, and you think about how far we've come. We did kind of just gloss over it, but the fact that the NASDAQ, pushed through the number that we were back in 2000, but I think really it's a different market. You think about, was it the pets? What were all those websites that were out there? Pets.com or I can't remember them all. But what was happening, Harry? It's all about multiples. Way back then in 2000, the average NASDAQ stock was trading at a 72 times earnings multiple. Right now we're about 19.5. Significantly different world. So, I don't think you shouldn't get scared off by the market number. You have to be more concerned with the multiples.
Tour de Force, Malamut, as usual, Tuesday mornings. I know how many people love to hear Chuck's analysis and the great information that you impart, Chuck. Thanks for a great visit. We'll see you in 1 week.
Harry, thank you.
The program that you've just listened to is paid for by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information you've heard provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. More breaking news. We've owned it. In fact, a radio station 30 minutes after I broke my story, huffing and puffing out of breath. I've got breaking news. I got breaking news. Breaking news. So Stockton, put me on the air. Put me on the air. I just listened to Harry. Oh, no, they didn't say that part. They're getting paid to listen to me. This is great. Come on, guys. Attribution. Come on. Be professional. I'm not making it up. I tell it to you right to your face. They listen, they steal our work, and they do not provide professional attribution. Disgraceful. News thieves, news bums, and yes, I'll say it, ass clowns. For more than 20 years, the D'Amato Law Firm has served as the official lead counsel to the Hurley in the Morning program. Led by certified civil trial attorney Paul D'Amato, the D'Amato Law Firm focuses their practice in representing those who have been seriously injured in construction, products liability, and motor vehicle collisions. The D'Amato Law Firm expertly handles cases throughout the country, but their primary focus is on representing victims injured right here at home in southern New Jersey. They've earned a reputation for excellence. From direct personal experience, I can readily confirm that the D'Amato Law Firm's overall competence, attention to detail, follow-up systems are outstanding, and they truly shine during your moment of truth before judge and jury. The D'Amato Law Firm is centrally located in Atlantic County at 2900 Fire Road, Suite 200. That's the second floor in Egg Harbor Township, New Jersey. That's the corner of Fire Road and the Black Horse Pike. For all of your personal injury legal needs, turn with confidence to the region's leader in the field of personal injury. They're the D'Amato Law Firm. Call 609-926-3300. That's 609-926-3300. And please tell the D'Amato Law Firm that Hurley in the Morning sent you.